Good morning, good afternoon, good evening, guys, and welcome to another video of DivingTrader. My name is Daniel, and today, guys, we're doing an update on Danimer Scientific, ticker symbol DNMR. This is a company, a stock that I've been holding for quite a while now. It's been hit quite hard, actually, very hard, especially in 2021. February 2021, we saw a sharp decline in a lot of growth stocks, innovative stocks, companies that are not profitable, and this is hasn't been an exception. If we can have a look at the price today, it's at $4.54. Okay, it's actually up at the time of recording. It's actually up post market. After the market prices of 4.6%. So tomorrow's Monday. We'll see how what the price does tomorrow. But on the long term, if you have a look at the long term, going right back to 2021, we have prices up here up to $58. I think, yeah, the maximum we reached was around about $58, and we're down at $4.54. So yeah, quite a hitting, quite a hit. There has been a lot of reasons for that. And have been a lot of short reports out on this company, a lot of damage being done, which I've mentioned in my last video. Okay, so yeah, but we need to be looking to the future. I mean, looking at prices as an investor, we shouldn't start to look at price as an investment. We should look at the fundamentals of the company. Now let's go in and have a look at this company. I'm not going to go into details about what the company does. I've already done a video on that. So let's just do a quick brief overview, because this might catch your attention if you haven't already watched one of my videos on Danimer before. Now, first of all, this company, let's go into have a look at the overview of the company on their website. Okay, so this is the company. They are a pioneer in creating more sustainable, more natural ways to make plastic products sold under their proprietary name, Nodax. Okay, so that's basically a plastic that is 100% biodegradable. Okay, so this is a problem, a solution to a problem that it's been talked about globally, right? We hear about it all the time, plastics in the sea, etc., etc. It's a big issue, and this is one of the companies which are combating this issue. So basically their plastic, called Nodax, is 100% biodegradable. So in other words, in contact with water, it simply means it will biodegrade, okay, without any trace of any damage to the environment. Okay, so so this is a big thing. The good thing is the company now holds more than 150 patents in nearly 20 countries for a range of manufacturing processes and biopolymer formulations. Okay, so yeah, so that's an overview of the company. That's what it is. It's for the future, and this is what I like about this company. They're building and putting a lot of money into the company to expand. So obviously this costs money. It takes a time to get there. So the company is not in profit at the moment. But as I mentioned, this is something I am looking at for at least the next 2 or 3 years. Okay, but we'll have a look at some news at the end of the video, because there could be some catalysts very short in the near horizon. So we'll talk about that at the end of this video. So let's have a look at the reason why. So yeah, in terms of the third quarter, so the third quarter wasn't as expected. So revenue just grew 4.2% to $13.4 million, which was below the average of the two analysts that said that we would get to 14.6. So they fell short of that. So yeah, that was back in November. So that gave it a hit to the company, which sent it down 17% and 18% on that day. The company's product segment, which makes up the vast majority of sales, was actually up 10% to 12.4 million. Okay, as it ramped up pH production at its Kentucky facility. Okay, service revenues, however, which includes things like contracts of research and development and specialty projects, fell 61% to 972,000. Okay, so yeah, so it's been hit quite hard, and I can understand why a lot of investors are a little bit cautious about this. So yeah, that's a little bit on the numbers. If we're going to have a look at the gross loss in the third quarter was 232,000, which is a turbulent sign, as it shows the business is unprofitable in its current state, even before accounting for overhead costs like marketing, management, salaries, and research and development. On the bottom line, Danimer reported an adjusted earnings before interest, taxes, depreciation, and in other words, EBITDA loss of 7.4 million compared to a loss of 0.5 million and a GAAP operating loss of 31.8 million. Okay, so yeah, so the numbers aren't good, right? So the numbers aren't good, but we'll go in a little bit more detail in a minute about the numbers to see, because this is obviously the risk of investing in a company like this when they're unprofitable. Numbers for the third quarter weren't good, but yeah, but let's have a look. Let's have a look at the numbers. So let's have a go into simply Wall Street, which we can have a better view of the earnings and revenue forecast. Okay, so this is reported their earnings. So they have a very slow increase in revenue. Okay, which is obviously the bad news, which is why we're seeing a lot of pessimism in this company. But if you see around about 2023 is when we should start to see a real or in middle of 2022, end of 2022, towards the beginning of 2023, is where we should see a real a good increase in the revenue for this company. Like I said, they're spending a lot of money on investing in new more facilities, which is obviously they're going to hit on the company, and this is normal, right? At the beginning stages of a company, if you go back to look at Amazon, you go back to look at all the big companies, at one point they had the same struggle, right? So this is something that we need to understand. Okay, so we have a look and go down to the financial health of this company. We have a look at their assets compared to the liabilities. As you can see, they have a lot of assets, okay, which obviously gives them a very, very good position. So it's not a company that we can worry about that they're going to go bankrupt tomorrow. Okay, so it's not a profitable company, but we do need to look at their financial position, their cash flow, and their assets to their liabilities. And as you can see in here, in the short term and long term, their assets really overweigh their liabilities. Okay, so that's a quite for an investor, that's quite it's quite good to see that. So we're going to have a look at their debt to equity ratio. If we look at the debt, which is the red line here, we can see it's been decreasing, okay, which is good. And then at the same time, we can see equity has increased, okay, gradually, and obviously very strong in the end of 2020. So they have a lot of cash on their hands, and like I said, cash is going back in to reinvesting in the company. Okay, so have a debt equity at the moment on the lot, well, at least the last recording, 5.6% debt to equity ratio, which is not bad. If we have a look at the other side, we have a look at some bit of good news. At least this was actually back in this month, a couple of weeks ago. Danimer Scientific drops to 758 million, and insiders who purchased earlier this year lose another 47,000. So there has been some inside buying, which normally is a good sign. Okay, and in fact, if you have a look at what we looked at the prices today with $4.6, these inside sailors came in and bought 101,000 worth of stock at an average buy price of $14. Okay, which is really quite over what the current price is at the moment. Okay, which is a good thing. Okay, so yeah, we have some insider trading, which gives a little bit of a comfort to us as well. So at first glance, I mentioned here, at first glance, the cash position deteriorated. Net cash is decreased by 183.6 million within the first to the third quarter of 2021, which implies a reduction in the cash balance by 48.3%. However, the company managed to acquire NodaxtM, a technology company that produces carbon-efficient and high-performing chemicals, as the transaction was valued at $152 million. This figure corresponds to 82% of cash outflow. Finally, the current assets to current liabilities is actually more than 10x its current liabilities, would suggest a sufficient level of liquidity in order to meet its short-term obligations. Okay, so so not good news, but at the same time, we've already said this, that the company at such a baby stage, this is sort of pretty normal. This is what we expect on all sort of companies that are going to be big in the future. They will start off as what we're seeing. If you go back to the days and have a look at your Amazons, big companies like that, they've all had the same struggle, okay, and they had to get there somehow. They didn't earn money on year one, so this is sort of the sort of thing you have to look past and see in terms of what you believe this company is. You have to have strong conviction and understand look at the numbers going along. Now, this year is going to be a key year. It's a key year, and we need to be looking at numbers very closely because we have had obviously some poor numbers in 2021, but it's estimated that 2022 is going to be a really good year. Okay. So we need to have a look at the quarter by quarter when we're investing in this company. This is a company for the long term in the basis of we can see the company going towards the way we want it to be going, right? So we still need to look at the fundamentals. So the company is not profitable. It does have increase in revenue, though they did suffer in the third and the fourth quarter, but they are putting a lot of money into expanding their business, which is to make money. This is needs to be done in terms of production. So they need to be producing mass to be able to meet with the demand, and this is sort of what it takes, right? So they've taken on this new company, acquired this company. So this is steps moving forward, and this is normal to see. This is quite normal to see in a very young company. And now look at the back. We also see that this was back in December. Danimer had recently rearranged issuance of senior convertible notes to $200 million, total principal amount from $175 million. Despite the operating loss, the company managed to improve its profit during the last quarters. Okay, so profit increased. In fact, Danimer is the beginning stage of its business expansion. Okay, we said that. Modernization of the Kentucky plant and construction of the Georgia facility are expected to boost profitability. Okay, so this is why I say this year, guys, is going to be a key year. Now, let's go into the next little bit of news we have here, and this is probably what's going to be the big catalyst very shortly. Why do I say that? There's hopes high for a global deal on plastic pollution. So a legally binding treaty that requires nations to reduce production and improve recycling could be signed next month. So we're talking about pollution. It's been talked about quite a lot, and there's not a lot being done about it. So it looks like next month we could have some very big news. The world's first global treaty on plastic pollution could be signed at a key international summit next month. Hopes of a treaty come as a report published by the Environmental Investigation Agency last week said there would be more plastic than fish in the sea by 2040. Okay, so we're just around the corner. It's not too far away at all. The government has joined charities, campaigners and businesses in backing the driver for an international pact on plastic to be agreed with the UN Environment Assembly meets in Nairobi, Kenya in late February. So this time next month, guys, this could be a catalyst. This could be a very big catalyst for a company because Danimer Scientific are a key player in moving forward for this campaign. They will be one of them. There are a few others, and they will be one of them. Okay, so this is going to be big news. We've got to keep our eyes peeled for this. So the end of next month, which is just a month away, we could see quite a lot of volatility. So we'll keep an eye out for that. Now, if we go in and have a look at technical analysis, quite difficult. Really quite difficult in terms of the support and resistance lines, because there's no support and resistance lines at the moment. There may be a resistance, but there's no support. We're actually right below at the all-time lows at the moment. If you have a look at where the price was at, as we saw at the beginning, prices were up this high, up towards near the $50 mark. Over $50, and now look at where we are. So yeah, support resistance lines cannot be drawn. We could have probably drawn them back when we were back here last year, these levels, which is where I drew them, I think, on the last video. So yeah, this was the trend we were looking at that time. These were sort of the trends, and as you can see here, having a look at these levels, we've broken these levels. So this was really the key level here, which is around about $10, and as you can see, we've smashed through those $10 mark. Okay, so yeah, so in terms of a technical analysis point of view, quite worried, very, very bearish. We don't know where we can have a recovery on that. Having said that, we start to have a look at the moving averages. We're below the all moving averages, okay, from the 10 to the 200, and the RSI is showing that it's been oversold. Okay, so that's the only key indicators that we have in terms of technical analysis. If we go into simply Wall Street, though, we can have a look at this price, and this is the fair value. I don't know how really accurate this is, because though I believe that the company is underpriced, undervalued to what it should be at the moment, I believe it should be at least $30 based on their numbers. They've given it a fair value of $51.34, okay, which is quite high. But at least that's actually 91.2% undervalued to compare to what it should be at the current price. Okay, so that's just to give you a bit of an understanding of price. So guys, that's a bit of an update on Danimer Scientific. Good news, bad news. I'll let you decide whether you think this is investable for your portfolio. It's an innovating company. It has a lot of potential in the future. At the same time, it has a lot of negatives working against it. This is a company that you really have to sit down and look at the fundamentals on a regular basis. It's not something you can sort of hold for years to come and forget about it. You do still need to be keeping an eye on it in your portfolio as an active investor or a passive investor. So we'll start to see results over the next coming quarters. We can see if it's still investable. I still back this company for the long term. When I say long term, the next few years at least. So yeah, but let's see what happens at the end of this month, end of next month, if there's any key price action that could influence. Let me know in the comments down below, guys, if you're a shareholder of Danimer Scientific. And also, if you want to see other videos, you go into my playlist, you can see the videos on the company of Danimer. Okay, guys, thank you very much for watching. If you enjoyed this video, hit that like button. And if you're new to the channel, don't forget to subscribe, because that really helps my channel grow. Guys, thank you for watching, and speak to you soon. Take care now. Bye-bye.